Hello everyone, once again to your weekend review and look ahead. I am Will Hassel, and as always, here we are with the Dow Jones Industrial Average, starting off with your review of last week's econ data and market happenings. As you can see, the Dow kind of had a rough week, mainly because we had this kind of trouble in Iraq. It looks like that there's going to be a civil war going on, and some stuff about Ukraine is still lingering on, although traders have kind of put that out of their minds for now. Mainly the Iraq thing. A group of basically really kind of far out Islamic terrorist group is invading Iraq. They're taking several cities. They're getting very close to Baghdad, and it looks like that's where the big stand is going to be. Thoughts about oil, the possibility of the oil going offline was a big concern, and that caused certain things like gold and oil to rise substantially, about 1% for gold, and about, I think it's like 4% for oil over the last week. The oil fields aren't going to get captured though. The Iraqi government knows that that is their main lifeline for all help of any type of European or foreign powers helping them out. But that's mainly what kind of caused the Dow to go down. We had some mixed econ numbers, as we always do. As you can see, it is closed just barely above that 50 and that 21 and 200-day moving average. Moving on to the SPY. It was a really kind of light week, except for this kind of selling that we saw because of that foreign news. So it was really kind of I almost call it like a CNN trading week, where you more pay attention to CNN than you would CNBC or Bloomberg or something like that. Same kind of thing with the SPY, with the S&P 500 ETF. Closed above 200 in the 50-day moving average. Just kind of lower. It ended up being, I think, like 0.8% lower. For the Qs, same thing going on, just slightly lower. Not as low as what the S&P did, if I remember right. Russell was kind of started going higher into the beginning of the week, much like the rest of the averages, and kind of held its own, although I have been hearing some things like it's been hitting key fib levels and stuff like that. Here's some of the channels that I drew a while ago. As you can see, it was doing this big downtrend, kind of uptrend, but still kind of making like this lower low type thing. Going now on to something that people have been watching very closely, and that is the VIX. Now, I am not a big options trader, as you guys know, but you always hear on CNBC, the VIX is low, the VIX is low, the VIX is low. Why? No volatility, traders aren't tantrum. Well, the VIX actually rose around 7% this week, coming off of the lows of just under 10 for the close of that last week. We saw like the lows that hasn't been since 2007, but it's actually never really sustained levels below 10 for more than like 2 days. So we saw that big rally basically off of the Iraq fears. Coming back to that 13 level, this was a great time, and still is a great time to go and buy some hedge for your portfolio if you are in the SPY for a very long term, very heavily weighted. Just a good thing to use to hedge against possible slight blips like this and it going higher. So I almost wanted to tweet out, "Are you happy, traders? The VIX is up above 11." Because they kept complaining there's no volatility. For investors, this is actually a very good thing, because it's a slow, steady grind, almost flattish markets, and that's really when investors make money as opposed to traders, because traders like the whiplash and the volatility, while investors just like calm seas and just uptrending markets, because that means you can buy an index fund and it'll keep going up. And that's what I like too. My portfolio is pretty much built for the long side, but I have that hedge ETF, so if we have like a minus spot 2% move in the SPY, that starts getting some momentum to the upside, and I'm just kind of hedged but still long, so some of my stocks are making money. That's pretty much I mean, I like that type of a market. Going for your econ data for this next week, it's all quiet pretty much up until Wednesday, where we have a big FOMC meeting. On Monday, we have the International Monetary Fund will release its annual review of the United States economy with a news conference by the IMF chief, Christine Lagarde. On Monday, we also have May industrial production. We're looking for a rise spot 5% versus the last period of negative spot 6%. May capacity utilization, we are looking for 78.9% versus the last period of 78.6%. Tuesday, a big thing that I'm going to be going and looking at. May CPI, we are looking for a rise of spot 2% versus last period of spot 3%. And May housing starts, big thing that we're also going to be looking for again here. We're looking for a rise in 1 million spot 1.03 million, and as opposed to the last period of 1.07 million. And then on Wednesday we have the FOMC meeting, and they will likely continue its tapering of bond purchases. Morgan Stanley expects the statement to include downward revisions for 2014 GDP growth and jobless rate, and upward reversed path for inflation. Chair Janet Yellen gives a quarterly news conference. Remember, this is the 1 year anniversary of the whole taper bit when Bernanke came out there and said we will begin tapering bond purchases, and in the following 3 days it was multi-percent moves up or down in the Dow Jones and in the VIX. We had multiple. Here, I'll do the 1 year chart, and you can go and see right here on that June, July, this 22 level in the VIX, big breaks, just kind of, oh my god type of fear. Look, I even have the volatility. It was this summer, and it's just kind of, oh no, type of a thing. But yeah, just keep that in mind. You never know exactly what they may say. So do keep an ear out for that. And then on Thursday, we have May lending indicators. We're looking for a rise of spot 6% versus the last period of spot 4%. And then June Philadelphia Fed survey, the Philly Fed, we were looking for 13.9 versus last period of 15.4. That was actually a very high number, if I remember right. It surprised to the upside. Going into my portfolio here, I'm going to actually start off on a different way how we're going to look at the performance. I'll use my range of, not that, of this, calculate. There we go. As you can see, I was down $7 or just about spot 1.6% UA. Under Armour leading it, followed by JPM, and then the rest were kind of just follow the rest of the downward market. Going back to charts here, we can start off with positions. I like positions. Hedge kind of performed like it should. Very low towards the beginning, almost back to those sub 12 levels, but kind of spiked upward when volatility in the markets went down. It's my hedge. Thus the name hedge. JP Morgan kind of started cooling off after the monstrous rally it has had for the last couple months. Ever since they got that downward slope, it's been really kind of going up near 60, which was a level that we haven't seen since that big kind of decline a couple months ago. Next thing is Visa. Oh God, Visa, my lord. I'm actually thinking about cutting this position almost, just because it's just been kind of just for the past couple of days. And like I've been commenting, because of the low volume and stuff like that, the spreads, and sometimes it's just crazy. Although it has been kind of doing this upward slope, it seems. Closed right below that 21 day, has it come into the 50 or 200 on the 3-month average. But when we look at that 5-day, it's below all the indicators. It's kind of in complacency land, kind of with the rest of the market. I'll go into Michael Kors, another complacency type of a thing. Although we have seen some big swings up and down, it still kind of just goes flat, like meh. Although I have to say, here I'll even go to the to the 1 day. No, I don't want to buy or sell. I went to the options. Nope, quote, whoops, I apologize. Here, I'll go into the 1 day, just so I even tweeted about this, that there have been some large blocks of shares moving about. Now, I do sometimes get caught up in the intraday stuff, because when I am on my desk researching, I do mainly look at the intraday charts just to go and get a read for, how they perform on an intraday. But I do also look at longer term charts, as you guys know from me looking at some of them on these videos. Here, Friday, 102,000 shares bought, barely moved the stock up until boom, then we go up. And then right here, an outlier, up 255,000 shares. That is a multi-million-dollar bet. Here, I'll even, let's just say, we'll use 93.75 times 255,000. That is, whoa, that is a $23 million bet that Michael Kors will go up. Like I said, these institutions are going crazy all over the stock with these low volumes. And for some reason, they're not even, because there is no liquidity going into the close or open, they're not even using that. They're just kind of picking intraday spots when things are quiet just to quickly go and do stuff like a 255,000 share order. Even here, even this little blip, 52,000. And some of these, they're not even happening on big major parts of action. As you can see right here, nothing. But that's that's the reaction afterwards. It's kind of, I get people asking me, what's going on with Michael Kors? What's going on with Michael Kors? And I go, well, what really is going on is the institutions are kind of playing around with it. They kind of shook everyone out after earnings, waited for people to get out, and now they're just kind of just digging in. Really, here I'll even go to a 20-day, that way you can go get, hopefully, oh no, a 2-hour chart. Yeah, there we go. Here's that earnings down, and then we've just kind of been chopping, really chopping along the 94 line. We got close to 96, which was that previous resistance. When we look forward out, 96 is a level I am watching. As we see here, 96, we got above 96, shot up, then down, and that was just kind of the complacent chop trade. Keep an eye out on this one. Watch volume. It will tell you a lot of stuff, especially when you look for these institutional large block shares. XLU, I've been hearing some people think it'll go down. Josh Brown went out and said on Fast Money he doesn't think it's going, but I see this. It didn't even reach the lower lows that it reached after the initial 52-week high was gone. I still think that this is a nice trade to be in. They act like bonds, but with better yield and slightly decent action. I have it as about a 5% holding in my portfolio. Two stocks that have been recently moving a lot. AIG kind of faded out this week, really. But I still love the story. Would like to see it go right up above 55 a bit, but then again, I'm not complaining because although it did kind of go down because of these talks that Ben Moshe is stepping down, though he will keep an advisory role on the board of directors. Fantastic CEO. The guy that they picked is more than competent, ex-JPM guy. And I think this stock still has a lot of upside. It's still deeply undervalued. Under Armour has been ripping the shorts a new one for quite a while as we look at this 20-day, 2-hour chart. It has just continued to rip. The key level here, though, is $60. 60, as we see here. Tried to go and touched up above it, went down, broke it out. New highs, fall, tried to reach up above 60, denied, big massive downturn. We've almost regained all of the prior losses. This is a multi-year growth story. I think it's getting kind of a World Cup bounce, but That's actually kind of not true because just the pure size of the decline. I think it's been shorted so much, people just got tired of it and they just want to buy the stock. Great multi-year time frame on this one. I'm looking at this 1, 2, 3 years out. They are still primarily a United States company. They haven't gone really overseas with a lot of their apparel. I love Under Armour. And now to bring you to a stock that I am watching, Disney. My lord, Disney has been kind of just getting really just bagged down ever since it hit those 52-week highs up at 86, and now has gone down quite a bit. And this is, I think, it's getting really tempting. Really tempting for me. I would love to go and get this thing at $80. $82 I'll take. Let me go in. I mean, this is really what I'm highlighting as my really big stock pick. That's going to be going on here. As we can see here, $80 has been kind of a chop level for a while. 82, 84, even bigger chop levels as we see this right here. You know, it almost looks like it wants to stage a little bit of a recovery right here and then go back. This is also another great stock that I really want to add onto my portfolio. Ooh, you know what I did? I forgot Starbucks. I'll get into that in a little while on why I think people should be buying the little downtrend that's going on right now. Disney, love this company. My God, this company, half of their revenue comes from ESPN. The other half basically comes from their parks and movie services. ESPN is half the revenue. World Cup's going on. They're going to be getting a ton of viewership. They've got the new Harry Potter Diagon Alley Park opening up, massive attraction. They're really capitalizing on that. Star Wars is coming out, 2015. That's going to be major cash coming into this. Like I said, ESPN and the parks basically keep Disney alive, and then the movies just print money. My God, I mean, just look what happened to Frozen. The How to Tame Your Dragon 2 was coming out. That was a big hit the first time it came around, so you can expect probably some more follow through on that movie. This is another multi-year stock, and I can see it probably by 2015 being at 100. And I really like that. It's 20% upside from here. And this is just a stock that I think you buy, you just kind of throw it away in your portfolio, forget about it until 5 years later, and you see, oh my God, I've got a 50% return on the stock. Going into Starbucks, a lot of interesting stuff going on into Starbucks. They actually released that by 2015, they will have over in 1,000 stores, they will have PowerMet technology built into their furniture. Meaning, you sit at one of the little bars or tables, and you can put your smartphone down if you have an adapter for it. I know. Had a discussion with this on StockTwits with a couple of guys about how the S4 kind of has the built-in technology, but not for the right brand that Starbucks is putting in. Although more and more you're seeing this kind of technology be put into phones, except for Apple. I think this is. I actually talked to a barista when I was over at Starbucks, and I talked to him about what's going on, because I also talked about the carbonator that they're starting to put out at my local Starbucks. June 24th is when that's coming out. He said that they've got some pretty interesting drinks going on with the carbonator. He says he likes some of them. He really liked the black cherry. He said he kind of likes the idea of it's kind of like Starbucks wants you to stay there more. You buy a coffee, whatever, read the paper, read a book, you put your phone down to charge, you realize it hasn't charged enough, you get thirsty, you buy another drink, maybe a sandwich, keeps you there longer, and I love that about Starbucks. The Frap trucks are out, and they're getting raging reviews. My barista friend and I talked about that. He really likes the idea that they don't take cash, because he says that's a big pain for them anymore, because the app just makes it so much easier for them. They don't really even have to tell anything. It's even easier than just sliding the card on there. People just tap and go. Now these Frap trucks, there's only one out right now. It only serves Frappuccinos. It only serves a select number of Frappuccinos, so you can't go get your cotton candy, cranberry, apple, whatever Frappuccino. You can get extra shots. You can get like a mocha frappuccino, espresso frappuccino, and stuff like that. And it's Starbucks cards and the app only, and Visa cards and stuff like that. They do not accept cash. I can see new mobile Starbucks opening up in New York, heavily populated areas, LA, instead of actually buying the real estate to do these. These things are very low margin cost, and you can move them around. I can see this happening all over the place, and I absolutely love it. I don't think that it's just a coincidence that they went and put up a frap truck in summer just to be like, oh look, we're gonna see, this is just for frappuccinos. No, they're testing out food trucks all across the globe. Their La Bula pastry company that they bought is actually opening up. They opened up a tester store in LA to go and serve food. That's going to be a separate brand from Starbucks coffee. So they're going to be kind of going into the burger food space along with coffees, and those are going to be two standalone brands. But La Bula accounts for approximately $2 million of Starbucks revenue. Now, looking at the chart here, I see it really wanted to go towards 76. It really wanted 76. As we can see here, you watch that 76 line all across the stock. Really wanted 76, and it got caught in this downtrend. But I think this is probably a good enough buying opportunity as it is. I don't think it's going to be breaking really like down to 72, 73 or anything like that anytime soon. Looking at the 3-month chart here, like I said, 76 looks like it really, really wants it. A lot of good news coming out of this company. This is one of those places that you kind of, the same thing kind of like what I do with JP Morgan, or what I said with, Disney. You kind of buy it, throw it away, and in 5 years you've got an amazing, amazing return. Really love this company. I want to buy more here if I had the cash. And I think I'm going to wrap it up with that, guys. Thanks everyone for watching, for tuning in. As you hopefully do every week, I'm Will Hassel. As always, thank you. Follow me on Twitter. Email me any questions. Tweet me any questions. Follow me on StockTwits. I love talking to people. I'll talk to you if you send me an email, if you send me a tweet. Please go on to leadersinvestmentclub.com to not watch only my video, but also all the other great blogs and media that's up on there by all the other Leaders Investment Club members. And I'll see you guys again.